Ladies and gentlemen, good day and welcome to the CHAMBAL Fertilizers and Chemicals Limited Q2 and H1 FY21 conference call. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal for an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Gavin Deesa from CDR India. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and thank you for joining us on CHAMBAL Fertilizer and Chemicals Q2 and H1 conference call. We have with us today Mr. Anil Kapoor, Managing Director, Mr. Gaurav Mathur, Joint Managing Director, Mr. Abhay Bejal, Chief Financial Officer, Mr. V.K. Gupta, Vice President Marketing, Mr. Rajveer Singh, Vice President Legal and Company Secretary, and Mr. Anuj Jain, Assistant Vice President Finance. Before we get started, I would like to point out that some statements made or discussed on the conference call today may be forward-looking in nature and must be viewed in conjunction with the risks the company faces. CHAMBAL Fertilizers and Chemicals Limited does not undertake to update them. A statement in this regard is available for reference in the presentation. We will begin the call with opening remarks from Mr. Kapoor. I would now like to invite Mr. Anil Kapoor to share his views. Over to you, sir.
Thank you, Kevin. Thank you for joining us on this call. I trust you and your families are safe and well. At the outset, I would like to inform you that there is no impact of COVID-19 on our operation, and our plants are operating at normal levels. We are taking all necessary precautions and following stringent norms to ensure the safety of our people. Despite the challenges posed by the pandemic, the company performed exceedingly well during the quarter and half year ended September 30th, 2020. For the quarter ended September 30th, on standalone basis, the company achieved a revenue of rupees 3986.94 crores, EBITDA of rupees 794.71 crores, and profit after tax of 416.14 crores, registering a growth of 12.3, 32.1, and 10.89 respectively. In comparison to the corresponding quarter of the previous year, our performance in DAP and potash was, our sales in DAP and potash was extremely robust. For the half year ended September 30, 2020, on standalone basis, the company achieved a revenue of rupees 7,205.61 crores, EBITDA of rupees 1438.34 crores, and profit after tax of rupees 730.17 crores, registering a growth of 12.5%, 25.57, and 19.47 respectively in comparison to the corresponding period of the previous year. Friends, considering the excellent performance during the current year, the Board of Directors declared an interim dividend of rupees 3 per equity share of rupees 10 each of the company. The board has also approved a revised dividend distribution policy, which is available on our corporate website. The said policy contains a provision that, subject to the parameters given in the policy, the company shall endeavor to maintain a total dividend payout ratio of about 25% of the annual standalone profits after tax of the company. Chambal Fertilizers and Chemicals Limited is today an established and extremely well-regarded agri-product company. Ours is the largest single-site urea facility in the country. Gadepan 3 is also, as you know, one of the most modern and efficient urea manufacturing plant in the world. Our distribution network is very strong, which offers us an opportunity to grow in non-urea fertilizer business. The company has established reliable supply channels over the years for sourcing of non-urea fertilizer from international manufacturers of repute. We also place a significant amount of emphasis on sustainability and environment and continuously make efforts to better our performance in this aspect. Our corporate social responsibility initiative, for which we are very proud, continues to support the community at large. We are proud to share with you that our CSR interventions, especially in the area of education, is playing a significant role in improving the education standards in the rural areas around our plant. I request you all to kindly visit our corporate website for more details in this regard. We are happy with our performance and look forward to continued growth and sustained value creation for all our stakeholders. With that, we will now open the floor for questions. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking questions. Ladies and gentlemen, we will wait for a moment while the queue assembles. To ask a question, please press star and 1. The first question is from the line of Madhav Marda from Fidelity. Please go ahead.
Hi, sir. Good afternoon. Thank you so much for your time and congrats on a very good set of numbers.
Thank you, Madhav.
So my question was, basically, is there any updated thoughts on our strategy for growth going forward? I understand that the balance sheet probably needs some more time to become ready for like a big capex, but any thoughts on our strategy going forward that's under discussion, if you could share?
Madhav, our strategy at this moment is to grow in our non-urea business.
Okay.
And along with me in this call is also Gaurav Mathur, whom I'll request to say a few words after I finish. As you can see, Madhav, we have grown quite well in the phosphatic business compared to last year.
Yep.
I'm sure you have the numbers.
Yep.
But quarter on quarter, last year, second quarter, we sold 2.8 lakh tons of DAP. This year, in the second quarter, we have sold 5.04 lakh tons of DAP. That's a substantial growth.
Yes.
And I'll now request Gaurav to say a few words regarding the future strategy of Chambal. Gaurav, would you like to say a few words?
Yeah. Thank you very much, Anil. Good morning, Madhav. Madhav, as I think Anil mentioned in his opening remarks also, Chambal has established and is a very robust company with strong brands, quality, and a very, very good channel. So we will continue to focus strongly on the non-urea products as part of our growth strategy. We do see even further opportunities in that area, and that will continue to be our focus for growth in the future.
Okay. And are there any specific, revenue targets or any type of products that you would like to talk about where we want to grow in the next 2-3 years?
Madhav, those are very forward-looking guidance, and at this moment, we would not like to comment on those because now that guidance will be for basically next year. Third quarter sales are coming to a close.
Yeah.
We have got only November and partial of December for which the sales will take place.
Yeah.
And then the Rabi season is coming to a close. Fourth quarter, as you people are all aware, is a very lean quarter for Chambal and lean quarter on sales.
Yes.
Our sales on the month of October is already there in the website which I have given to you all.
Yes.
So kindly go to that website and you can see that we have done quite well in the month of October. So phosphatic continues to be our growth area. Non-urea, non-fertilizer business, as Gaurav was mentioning, also is a focus area for Chambal. And Gaurav and his team, I would be happy to share with you all, are going into a fair amount of details in strategizing non-fertilizer sales in our territory. As soon as we are very clear on the path which we will take, we will share with you all.
And so just last question, if I can just ask, what sort of net debt to equity or net debt to EBITDA number once we become comfortable going ahead with a capex program?
No, I will not put the cart before the horse. If there's an interesting capex program, or if there's an interesting capex project available, we will go ahead. Our profits are quite good. Our cash profit is very decent. If there's a very interesting project, I don't think so our debt and debt reduction is going to be a hindrance in that field. But that should be an interesting project with a very, very good return on capital.
In the past, you mentioned
Mr.
that...
Madhav, sorry to please request you to return to the queue for your follow-up questions as we have several participants in the queue waiting for their turn.
Sure.
Thank you very much, sir. Before we proceed with the next question, we would remind participants to restrict their questions to 3 questions per participant. In permitting, you may return to the queue for your follow-up questions. Our next question is from the line of Baidik Sarkar from Unifi Capital. Please go ahead.
Hi, Mr. Kapoor, Mr. Baijal. Congrats on a very strong quarter of execution. My question is that tailwinds from the monsoons this year and resultant acreage expansion has obviously been very strong. And obviously the data is showing up in the DAP volumes up 69%, YOY. Would this high base be of concern as we head into next Kharif, and if not, why?
Very good question, Baidik. Firstly, I would like to mention that Chambal operates in an area which is more or less 100% irrigated. Punjab, Haryana is very well irrigated. Madhya Pradesh is fairly well irrigated. Western UP is very well irrigated. Small pockets of Rajasthan and Eastern UP are areas where irrigation potential is not up to the mark compared to our other territories. So if you have seen of the total sale in our territory, not necessarily Chambal, total sale, even in bad monsoon years, has been pretty good. So we are sort of independent of monsoon. Now, regarding your second question, as to sustainability and growth, I can share with you that the sales which we have done this year are sustainable. I do not see any reason why they are not sustainable.
Sure, that's helpful, sir. And secondly, our leverage is off very sharply this year. To understand this better, is there any amount of seasonality in the reduction of leverage? And as we head into Kharif next year, do we see our capital requirements go up? Or would you reckon the amount of cash flows we're getting in as we speak are good enough to support our capital requirements for the coming season? And if you could quantify what number of leverage are we looking at towards the March exit numbers?
I would request Abhay Bajal to answer this question, Baidik, if it's okay.
Yeah, hi, Mr. Bajal.
Yeah, Baidik, coming to your question, we have got a good amount of subsidy in this last quarter, which is reflected in the reduction in the leverage, which you have rightly pointed out. You know, the last quarter of the year is normally lean for subsidy, so we will expect some amount of growth back on the leverage. But I think overall we will be better off by a couple of at least 50-20 basis points from the last year's situation. And also we will try and see in terms of how we can manage this particular situation. Going forward, the Kharif season requirements, depending on the prices of gas as well as the prices of other fertilizers, that outlook is slowly beginning to develop, and we should have a fair fix of the number by the third quarter. Once we have that, the capital requirement for the Kharif season will become clearer. So as of now, I'm not ready to predict on both because of the gas prices as well as the value of the dollar value of the imports that we will do for the non-urea fertilizer business. I would say that that question should be left for the third quarter. When we will
Baidik, I would also like, Baidik, this is for you and all my colleagues who are there in this investor call. Baidik, are you there?
Yes, sir. Please go ahead.
Baidik, you see, there are two types of borrowing in Chambal. One is a long-term project of Gadepan 3, on which we have borrowed and we have an ECB. And the second one is our working capital. Our working capital is more or less backed by the bills which we have raised on Government of India.
Right.
And you will appreciate, so far, government has not defaulted on any of our bills which we have raised on them. There is hardly any deviation in those bills. This is like a sovereign debt. So, you know, how you treat it, I've been asking Abhay that you should discuss with the rating agencies that this is like a sovereign debt. It's the process of raising a bill. It's fairly complex. I cannot just raise a bill on Government of India. So, if sometime later on, if anybody desires to understand how we raise a bill on Government of India, it's a very complex process. And once a bill is raised, the payment is assured. Am I right, Mr. Bajal?
Yes, sir, very much so. And in fact, we have indicated in our presentation that both in our representation on the subsidy receivables, that there is an amount of 4,031 crores, which is the claims which have been preferred on the Government of India as of September 30th, 2020. And our short-term borrowings against that are actually 3,300 crores, which means that virtually, if I were to treat that as cash in hand, in some senses, because it's a near cash asset, only the factor rate is delayed because of some reasons. But otherwise, it is more or less like a near asset. If you have to set that off, our debt equity is very, very comfortable, actually speaking. So that point, what you are making is we have tried to emphasize in our investment presentation to the investors, right?
Sure, that's very helpful, Mr. Kapoor, Mr. Bajal. And one last question, if I may slip that in. Can you just give us a range of what the proportion of a non-urea EBIT might have been for this H1? I understand it's an annual disclosure, but if you just give us a broad range for this H1.
Abhay, would you like to share or this is a Scott?
I would say that it is about, it's a fairly decent number, and the fact that we are emphasizing the sales of DAP and margin expansion.
See, Vaidik, I would request that this is a very confidential number, It's a very robust number that I can share with you. And for us to share that number of non-urea business at this in a call, it also opens up for,
No, I understand that, sir.
I have to be very careful on this number.
Sure. And, we've been reading about a lot of acreage expansion this Rabi. Are you seeing that reflect in your DAP dispatches as well as channel stocking for the months of October and November?
See, it will be very interesting. I'll ask Mr. Gupta to give you he's a head of marketing and sales, that the way to look at our business is to look at the 9-month sales. Don't go with the 6-month sales. And if you look at the 9 months growth from January to September, you will see that the growth because what happens, Rabi season gets over by December. Yeah. From January, the placement starts. And sales in our territory should ideally be taken from January onwards. So when you take from September, you can get, comparison from year to year may not be a right way to look at it. So when you look at from January to September, Mr. Gupta, would you like to share what was the sales in the country or in our territory last year compared to this year, and what is the growth this year?
Sir, I'll give you. Mr. Sarkar, last year, if we look at the 9 months number, last year, that is January 19 to September 19, in our territory, CFCL territory, that is North India, the sale was 58 lakh tons. This year it has been 61 lakh tons. So growth has been of 3 lakh tons, while Chambal's growth has been from 7.5 lakh tons to 11 lakh tons. So we have taken the total growth in our territory that we have taken plus 50,000 more we have taken this year.
Sure.
I hope we have answered the question, Vaidik.
Already said it's a wet area. So monsoon does not make that much of an impact. The swing is not that high. It's a very stable market. But we are growing in this market because our footprint has increased in terms of urea sales and in terms of non-urea sales. So all our products, they are following the same curve. So Gadepan 3 has given us a flip to increase our depth in this market, and we still see some more potential for further growth.
No, that's very helpful, sir. Thank you so much. My best wishes, Albeit. Thank you.
Thank you, Vaidik.
Thank you very much. The next question is from the line of Amit Doshi from Care PMS. Please go ahead.
Yeah, thank you. Congratulations on the great set of numbers.
Thank you, Amit.
Just, sir, you had mentioned in the last phone call that you are considering the additional approval from the ministry with reference to that 15% possibility of additional urea production. So anything on that, if you can share?
I thought I had mentioned in the last call, government has not given us approval for additional production from Gadepan 3.
Oh, okay. So that's not likely to come up.
Yeah, that's not likely to come. And anyway, let me be honest with you, Amit, the contribution because of that was so small, it was hardly worth pushing government to reconsider that. We thought we'll use that opportunity to carry out necessary repair work and maintenance work in the plant, which will help us in the next year.
Okay, fine. With reference to this presentation, where you mentioned that your market share has increased on the urea side. So can you share as to how are we increasing our market share? I mean, in the urea, since we have already been, Gadeban 3 has been there since last year. And so that's Maharashtra is the reason why it has increased. And if yes, then, so basically if you can share something on the market share growth on the urea side.
V.K. Gupta, would you like to share?
Sir, Mr. Doshi, if you look at in our territory where Chambal is operating with urea quantities, the total sale is about 210 lakh tons of urea. 40% of this sale goes through cooperative where we are not there. To a large extent, we are not there. So the leftover market is about 120 lakh metric ton, and we are selling almost 32 lakh tons in this market. So almost 25% is our market share, which earlier used to be about 16% in private sector. So that has given us the real footing in the urea segment here, because every fourth bag in private sector is a Chambal bag.
Okay. What he means to say, Amit, is basically we have been able to expand into areas where we were not prevalent in the past.
No, we were there. Our market share has increased in all markets where we were operating, Punjab, Haryana, Rajasthan.
By market share, I mean to say, Mr. Gupta, by market share, in say in Uttar Pradesh, we have been where we were in areas where we were not prevalent or not strong in the past. We have, because of additional urea available, we have been able to grow an additional area. So with that, what happened? We have got new dealers, we have got new retailers, and our market share in those territories has increased.
Yes.
Okay.
That answers the question, Amit.
Yeah, and Maharashtra is also, I mean, kind of an added geography, right?
That's right. Maharashtra is a territory which we would definitely look at in future, and I'm sure Gaurav may like to throw some light on what we plan to do. Gaurav?
Yeah, so we have developed our plans for Maharashtra, and our team is also now partly in place, and we are looking to make a formal entry into Maharashtra next year in the coming, and we will start our placements as per the season in Maharashtra in the coming fourth quarter of this year. We have already taken an office over there, and we have lined up, we have looked at the product range that sells in Maharashtra specifically. The seeding of the market in terms of urea rakes supply has also started. So we are very actively pursuing our entry into Maharashtra again.
Okay. And now the third and the last question on the non-urea front. Basically, apart from DAP and MOP, we also mentioned that we are into pesticides and micronutrients, etc. So, what kind of portion would that be? It will be very minuscule, or and accordingly, what kind of target do we have on that segment? And on the non-urea front, because earlier, our major portion of the outstanding subsidy used to be on the urea side. Now, with non-urea continuously growing, approximately 1/3 plus outstanding subsidy is of non-urea. So, is there any separate mechanism on the non-urea front? Anything that you can show? So, basically, both this part on the non-urea front.
You have asked many questions. I'll just confine my answer to non-fertilizer business. You see, non-fertilizer business is a very interesting opportunity for Chambal. And Gaurav and his team are sort of going into fairly detailed manner in our non-fertilizer business. And it's not a small business. It's a fairly decent business. There are very large companies operating in that area. And with Chambal's dealer network, it's a very good opportunity for Chambal to grow. Yeah, compared to urea and DAP EBITDA, it would be small, but potentially very good. And growth rate in that area business would be 20, 25, 30%. So in the next few years, in say 2 years or 3 years, it will become a substantial contribution to Chambal's bottom line. We started with DAP also same way. 7, 8 years back, our contribution in non-urea business was abysmally small. Today, it constitutes a fairly large portion of our business. Now, while urea, DAP, MOP, NPK continues to be the bread and butter of the company, we are now focusing on non-fertilizer business. And we are quite excited by that prospect. Am I right, Mr. Gaurav?
Yeah, Anil, absolutely. And we are working in that area and looking to expand that and leveraging, like Anil mentioned, our strong dealer network, our brand. Clearly, because of the focus a lot in this last few years was to make sure that Gadepan 3 comes online, and we really make that happen well, which Chambal has done an excellent job of. And now the time has come that we are looking at these products also. So we have some work going on to grow that area significantly.
Okay. On the subsidy front, sir, the non-urea part, anything that you can...
Subsidy non-urea part is substantially lower. See, what happens in urea, it will be not 1/3 of the total subsidy will be phosphatic. Abhay, would you like to share out of the total subsidy, what is the percentage of share in phosphatic and what is the percentage of share is in urea?
Anuj, do you have the numbers?
We'll share with you later on, Amit. We'll post
Yeah,
it.
sure. I think as per presentation, the PNK represents approximately 1/3 of outstanding subsidies.
Yeah. It is given.
It is given. PNK is...
Yeah. No, I just wanted to understand, is there any separate or a different process vis-a-vis recovery of those subsidy, or is the same like urea? That's it.
No, there is no difference in the recovery process. The same sort of bills are to be made. The same process has to be followed. And the allocation of subsidy also is more or less similar.
No, but I would just like to mention, Amit, if you look at it, total subsidy is 3,916 crores, subsidy outstanding. And in urea, it is 3,226 and PNK is 674. So it is 15% of our total subsidy outstanding. You see what happens?
No, sir, I think you're referring to Q2 FY20 numbers, whereas FY21 is a different number.
21 is different. FY21 right now.
Okay, H120. Okay.
I'm going by FY20. FY21 also, if you see, out of our total subsidy outstanding of 4,774 crores, it is 1,301, which is for PNK. So it is around 25%. And what happens is that in PNK, let's look at a product like DAP. The selling price for market realization, we get approximately 22,000 rupees. And subsidy is approximately 10,000. But when you go to urea business, it just flips around. We have got government outstanding at maybe 10 to 12,000 rupees per ton, and market realization is only 5,000 to 5,500 rupees per ton. There's a big difference.
Got it. Okay. Thank you so much, and wish you all the very best.
Thank you.
Thank you. Next question is on the line of Pratik Tolia from Elara Capital. Please go ahead.
Yeah, thanks for the opportunity. Good afternoon, sir, and congratulations on a very strong set of numbers. My question is pertaining to your non-urea business, which you were just alluding to. Sir, EBITDA contribution, although you're not sharing it, but based on my calculation, would be the EBITDA split between fertilizer, non-fertilizers, urea and non-urea would be somewhere around 70 to 30. And you mentioned that this number used to be very abysmal 3-4 years back, so it's already 30% right now. So my question is basically going forward with all the strategies that you're developing in terms of scaling up your non-urea business. Where do you see this split going forward? Do you expect this to become a 50-50% sort of, because your urea EBITDA would fairly remain constant. So this non-urea can how much can it scale up from here onwards, and what would be the levers for this to make this 50-50, let's say now 3 years from now?
We'll have to progress in a very gradual manner. We cannot sort of shake the market in a sense that there are established players in the market. So the growth is going to be a decent growth, albeit not a very aggressive one. And that is the reason why we are entering new territories. Growth is going to come in our territory as well as in newer territories. And as Gaurav just mentioned, we are entering Maharashtra, where there is a lot of opportunities in A, urea business, B, non-urea business, C, non-fertilizer business. Maharashtra is a very interesting place as far as non-fertilizer urea business and P&K business. It's got aggressive water soluble. It has got opportunity for agrochemicals. So there will be it opens a very interesting opportunity for Chambal. And as soon as we start, getting our feet wet in territories like Maharashtra, we'll have the same growth as what we have shown in our territory. So you should have faith in Chambal. We have delivered whatever we have promised. I don't want to commit to a certain number and then not deliver, which will not be fair to Chambal.
Sure.
It's better to deliver and then talk.
Right. But just, on the margin front, this time even the non-urea margins are also very strong, based on my calculation again. But do you think that, with now phosphate prices going up and DAP prices have also increased, you think that we can maintain or sustain in these margin levels, or, because the manufacturers, especially who have backward integration, would be better off under such times versus companies who are trading. So how do you, expect to or sustain your margins at current levels or even improve from here onwards?
Very interesting question which you have raised. Let's look at backward integration. We are already backward integrated. We have got a phosphoric acid plant in Morocco.
Correct.
So if phosphoric acid will make money, we will make money in Morocco, for which we have got 1/3 share in Morocco. So as a result, we'll get profits there. We just don't, between the phosphoric acid and selling, we just don't have a granulation plant, which is not a very expensive plant and not a very value addition plant as far as the product is concerned. We can put a granulation plant any day we want. So the real value addition comes from the market and in phosphoric acid. We are present in both the places. So and as far as DAP pricing going up, and so DAP prices go up, yes, they have gone up. Either going forward, the DAP prices will fall down, or the market will correct itself to higher MRP.
Right. Sure. But any thoughts on, because now we have, our DAP and NPK volumes are also so high. We've captured market share. So any thoughts on, putting up this granulation plant and, getting that value added, whatever value addition is there, you get capturing that also, or we would be comfortable with trading even now?
We put it this way, we are constantly in our organization thinking about growth strategy. And as soon as we finalize any strategy for which we need to do some backward integration, we will share with our stakeholders immediately. So as a large company, we are constantly evaluating options for growth in Chambal. I cannot share more than that.
Fair point. That's just one last question.
Sorry to interrupt, but may I please request you to return to the queue for your follow-up questions, please, sir?
Okay. Thank you.
Thank you very much, sir.
Thank you, Pradeep.
The next question is from the line of Manish Jain, an individual investor. Please go ahead.
Sir, as the food prices have gone up substantially and the procurement from the government, especially in Punjab and Haryana and all the, as pointed by the Commerce Minister, Mr. Piyush Goyal, has gone up substantially. So do you think it will help us in the Rabi season quite nicely? Thank you so much.
Thank you, Manish. Manish, Punjab and Haryana are fairly saturated market, and we do not get much of growth in business in those territories. We may get growth in non-fertilizer business in those territories. But as far as fertilizer is concerned, they are fairly saturated, 100% irrigation. And what we have seen is that over the years, Punjab and Haryana have hardly grown in their consumption. The basic consumption area which is increasing is newer territories like Madhya Pradesh, Rajasthan, certain aspects of UP. And that is what our focus is. If you look at MFMS is an excellent website, and if you can go through that, you will see Punjab, Haryana fertilizer consumption is quite static. Hardly any growth.
Thank you, sir. Thank you.
Thank you.
Thank you very much. Next question is from the line of Sudarshan Padmanabhan from Sundaram Mutual Fund. Please go ahead.
Yeah, hello. Thank you for taking my question. Sir, my question is, sir, can you hear me, sir?
Yes, I can hear you, sir.
Yeah. Sir, my question is on the cash flows. I mean, in your initial remarks, you did talk about, the receivables being better and therefore debt coming down. But if I look at the actual cash flows, I mean, you basically have seen a release of about 200 crores in terms of receivables. But where I see a large part of cash getting generated in the working capital is from the payable side. I mean, from the reference point that is given, that's from the last year, it's actually added close to about 1,000 odd crores. And I mean, my question here is, one is if I look at the urea, non-urea component, the non-urea has substantially moved up. So is it primarily because of the mix, or have we taken a conscious decision to basically, have much better negotiation powers with our suppliers?
Abhay, would you like to answer this question?
See, much better negotiation definitely is one of the things that will happen going forward. But in this particular instance, the release that you are seeing is also because of the facts of being some amount of ships being in transit, and we have got CFR contracts. So that is one of the issues, but also definitely some of the suppliers have given us a little bit more extended credit. So, and that crossed the quarter in a certain sense. So that has helped us, as you rightly said, in terms of trade payables.
Sure, sir. Sir, my second question is, on this whole subsidy part. The government had talked about, a pilot program, this DBT2, wherein they are basically, putting the money directly to the farmer. And there has been a white paper on that suggesting how much money is to be given for a piece of land. From that side, I mean, number one is, how serious is the government with respect to going ahead with this? And number two, if they go ahead with it, I mean, any timelines, I mean, whether it's going to be next, 1 year, 2 years, 3 years down the line, because from our cash flows perspective, I mean, subsidy moving away from us and directly to the farmer would mean a completely different paradigm as far as cash flows are concerned.
See, Sudarshan.
Yes, sir.
As far as subsidy is concerned, well, the DBT direct to farmer, something would have happened if COVID had not taken place. COVID has, created a sort of a setback into government's plan for direct benefit transfer. Nevertheless, now this is my personal view. As far as subsidy is concerned, the way things are moving, the industry, the only few companies in the industry are making decent profits. I'm sure you are following the profits of the entire industry. And for the health of the industry, the government will have to do something major. If not this year, then definitely in a year or two. I've been in this industry for too long. And I can see some of my colleagues in the other industry are struggling. As I said, there are a couple of companies, maybe 2 or 3 at best, who continue to do well and attract capital at very low rates from the market. So as a result, for companies like us, 1,000 crores would only mean an increase in interest rate of 35 to 40 crores, which is neither here nor there. But for certain other companies who are borrowing at 9%, 10%, 8%, the impact is quite bad on their balance sheets. And hence, something will happen in the next year or two. And whenever that happens, the good companies will always benefit. That will be the turning point where certain of our ratios, which you people keep asking, will substantially change. And I'm quite certain that will happen.
So thank you.
I hope I've given you a sort of a forward-looking answer. But
yes, sir.
It is my personal viewpoint.
Sudarshan, I just add, I forgot to mention one thing. Mr. Rajveer Singh, who handles our legal, also handles gas. And he has been successful in also elongating the payment cycle for gas payments. So that has also contributed for last year. Also question about trade payables.
Sure.
Thank you very much.
Thank you.
The next question is from the line of Deepak Chitroda from Phillip Capital India Private Limited. Please go ahead.
Thank you. Thanks for taking my question, and and congratulations on good set of numbers, sir. So I think most of the questions have been answered, but if I can ask about the shutdown plans which we have for end of this Q4, which we already taken last year. So any plans for the shutdown for any of the urea plant this year?
Chambal has sort of a 2-year cycle for shutting down its plants. But Gadepan 3, because we achieve 100% production in 11 months, so that will necessitate a shutdown of Gadepan 3 in the month of March. And we also, Gadepan 2, we actually had to take a shutdown in the month of April, but because of COVID, we could not do it. So we just had a very small shutdown of 10 to 11 days. Because there were certain repairs which were absolutely necessary. So we will take a shutdown of Gadepan 2 in the month of March.
Okay. And for how many days for G3 in March?
G3 would be for a full month of March.
Okay.
G2 also would be about 30-35 days. some amount would be, bulk of it would be this year, and it will carry forward to beginning of next year.
Okay. Okay. Sure. Sure. And secondly, just to basically take it forward from the previous participant regarding the outlook for H2, as we have already seen almost about 70 to 80% kind of growth in Q1 and Q2. So do you think this kind of a higher rate of growth will be sustained in the H2, especially in the non-urea side, considering last year also we had a very strong Rabi season? So any thought process on that side?
As far as Q3 is concerned,
yeah,
we will have, we have got enough material which is required by the market, we will be able to sell. And we have bought the material and we'll be able to sell. Our growth will be decent in that area. And fourth quarter, we have hardly any sales. Fourth quarter, there are hardly any sales in the country. It's all a placement strategy. If I want to increase my sale, I can show it, but it's a placement strategy. So that it will depend on how we want to see. Otherwise, it's a fourth quarter is a placement, complete placement.
Mm-hmm. Sure. Sure. And sir, my last question regarding the debt repayment. Is there any now scheduled repayment which is due in the Q3 and Q4 for the long-term debt? I understand that in the working capital side, it's very difficult to have any clear view, as Mr. Bhaijal also mentioned about it. But any thought process on the long-term debt part?
Long-term debt is there's a very scheduled payment cycle. Every half year we have to pay. And the next payment would be in March 2021. Every 6 months we have to repay our loans, and we are following that cycle. So March 21 we'll have to pay.
Okay. Okay. And if I can squeeze in a couple of bookkeeping question about the MRPs, current prevailing MRPs for DAP, MOP, and what was the pool gas price for the quarter?
See, what happened was, in the second quarter, early second quarter, the MRP has remained same in second quarter, early second quarter and third quarter. But the margins which we were giving to the dealer has substantially reduced.
Okay.
Are you getting it, what I'm trying to say?
Yeah.
So as a result, the net back to Chambal, that has improved, and that takes care partially our price in our increase in price of DAP.
Okay. But do you think that anyways we have a very low inventory in the system as well, so that this kind of a discount which we have been reduced, that will continue in the Q3 and Q4?
Q4, as I said, if you look at it, our profitability in Q4 is very low. So it's not even worth talking about it. Q3, I foresee a decent quarter.
Okay. And about gas, pool gas price and the MRPs, you can talk about it.
As I mentioned about MRP, the MRP will remain the same, but discounts in the market have substantially reduced.
Yeah, so it is roughly around 24,000 if I assume correctly.
Yeah, the MRP is 24,000. The discount which we were giving to the dealers has substantially reduced by approximately 50%.
Oh, understood. Thanks.
Thank you.
Next question is from the line of Abhijit Akella from IIFL. Please go ahead.
Yeah. Good afternoon, sir. Thank you so much for taking my questions.
Yeah, thank you, Abhijit.
Sir, a couple of questions on the industry, scenario actually. One was regarding your thoughts on, this entire year of FY21. We've been reading reports about, massive shortages of fertilizer across the country and long queues of farmers outside the dealer shops and all that. So just, your perspective on what exactly has happened, why this has happened despite, seemingly fairly normal production from the industry side. And also, I believe the channel has therefore, tended to maybe stock up quite heavily in recent months. So how do you see the inventory situation in the market right now, and could there be kind of a temporary lull in channel ordering from the industry for the next few months?
Which fertilizer would you be referring to, urea or non-urea?
I believe mainly urea, sir, but I had heard that it applies to pretty much all the products so far this year.
Okay, because as far as urea is concerned, our business is a very static business. We produce approximately 32-33 lakh tons, and we sell it in literally on cash. So as far as and government has taken very proactive steps, I must say, to import substantially large volumes of urea. The recent tender which the government came out was, am I right, Mr. Gupta, was approximately 2 million tons?
2.2 million tons.
2.2 million tons. So government is also well aware what is the situation in the market, and I am quite sure this government is very conscious of the fact that there will not be any urea crisis. As far as phosphatic is concerned, in our territory, I don't foresee a crisis. There will be certain pockets where there may be a little shortage here or there, but there's no crisis in our market. There is sufficient material in the field. If you look at the post stocks of every company, it's quite robust. So I really don't see any crisis in the market.
Okay, sir. So the second question I had was with regard to, there's been this talk from the government about maybe linking fertilizer sales with the soil health cards. There were actually some reports, in some of the papers that they might be considering, setting a limit on how much a farmer can buy depending on the soil health card data of his farm. So is there any such thought process actually underway, and could it, actually happen next season, or this is just again, rumors?
No, but what has really happened, I can just share with you, is the government has limited the sale per farmer. I think, if I'm not wrong, Mr. Gupta, 100 bags a farmer?
100 bags in one transaction. Yeah.
So government has restricted the sale to the farmer of 100 bags. That is mainly done to prevent diversion of urea for non-fertilizer use. And there is definitely a thought process to link it with NPK, soil health card, and look at the NPK. And if that were to happen, I am telling you that would be really good for the farmer, because our use efficiency, nitrogen use efficiency in the soil has reduced substantially. And it's high time that we correct our NPK ratios. Urea being so cheap, the farmer tends to use a little bit more urea. And he has to switch the ratios in the ratio of 4:2:1, which is the ideal ratio of NPK. So if this were to happen, I think it will be a great thing for India.
Thank you. Thank you so much, sir. Wish you all the best.
Thank you. Thank you.
Thank you very much. Next question is on the line of Shanti Patel from Shanti Patel Investments. Please go ahead.
Yes, sir. I have got a very simple question. Our government is a proactive government as far as the farmers are concerned, and they want to double their income as early as possible. Now, once their income doubles, what will be the impact on the fertilizer industry in general and our company in particular?
Good question, Mr. Patel.
Thank you, sir.
Let me first say from double the income. I have got Mr. V.K. Gupta, who not only does our marketing and sales, he is an agriculturist by profession, by birth.
Oh,
I will request him to first share that out of the total money which this company makes, which a farmer makes per acre,
correct,
what is the share of fertilizer in it?
Perfectly right.
Okay. For example, hypothetically, per acre, if the farmer makes 40,000 rupees per year,
correct,
then what is the share of fertilizer in that 40,000? Okay. Because when the government talks of double the income, so if the prices of fertilizer were to go up, then to that extent this amount will also double because uska investment lag gaya, etc. So I'll let this question be answered by an expert in this field. And as far as your company is concerned, we are fortunate that we are in a 100% irrigated territory.
Right.
And with Gadepan 3 happening, the opportunities for this company has become very interesting.
Right.
My view is that the fun in Chambal has just started. The future years are going to be very interesting. I can't say more than that. And now I will let Mr. Gupta answer your very interesting question for which I am also waiting for a year that answer. Gupta ji, jara batao.
Basically, if we look at the food grain, that is wheat and paddy, it comes to roughly 15%. And when the government is giving a return on cost through MSP, like this year in wheat, farmer is getting 106% return on the cost. That means for 15 rupees spent, the farmer is getting back 30 rupees for fertilizers. So farmer is not at a disadvantage in case the fertilizer prices go up, rather his return goes up. Okay? Because it is, government is picking up the total quantity and the profits are ensured. Okay. In other segments also, what studies have come from Karnataka and Andhra, the return per acre of the farmer in cash crops is much more than in food grain sector, like in Punjab, Haryana. So there the farmers also would be benefiting. So, I mean, revenue is neutralizing fertilizer cost and giving a return also in the current scheme of the things which government is following. And with the introduction of amendment in APMC, there would be infrastructure investment in this segment and value realization for the farmers would be much better.
More. Correct. So effectively the demand for fertilizer may go.
Definitely what will happen?
Definitely. Like if we take the case of sugarcane.
Right.
The government has been telling the sugar mills to buy at a certain price.
Correct.
Okay.
Yeah.
And there has been a very good return to the farmers everywhere, like UP or take it
Mr. Gupta himself is a sugarcane grower in UP.
Yeah.
So he's an expert in sugarcane.
Yeah. In fact, the sugarcane growers in UP are called kulaks, which is a Russian term for rich farmers who have political strength. Correct. So this APMC Act, I would say, is just like going sugarcane way, where industrialization of agri output has taken place.
Correct.
So if that happens, agriculture is bound to gain, and certainly the input industry would also gain.
The consequent effect will be ultimately the farmer and the fertilizer companies will have a better day.
Yes, also, Patel bhai, what will happen, and that is why our focus has changed.
Yeah, that is what I know.
We will see what will happen. The farmer will put some cash crops.
Correct.
Then what will happen? His use of certain other type of fertilizers, namely water soluble, will increase. Certain amount of sulfur will increase. And our focus area to grow is exactly that area which I mentioned in the past earlier. So, there will be other types of fertilizer, other types of non-bulk fertilizer which we have been selling so far. Those areas will increase, and our company is at this moment focused on these newer types of inputs to the farmer.
Yeah, because we have to structurally change according to the circumstances which we foresee.
And we have to be forward-looking.
Forward-looking. That is what. One has to be, otherwise one can't progress.
That's right. That's right.
Thank you very much. That is what I wanted to confirm with you because you are in this industry for a very long period of time.
Yes, yes. Our product is very good. Our quality is very good.
That's right. Thank you very much. Thank you.
Thank you. Next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yes, Saket.
Saket Kapoor, your line is unmuted. You may proceed with your question. Mr. Kapoor, are you there? As there is no response, we'll move to the next question, which is from the line of Prasann Hazariwala, an individual investor. Please go ahead.
Hello.
Yes, Prasann.
Yeah, congratulations for good set of number and improving efficiency. So my question is like, we have constant capacity in urea, right?
Yes.
3.3 million. So when we explore other markets, how we are going to sell the urea to them? Because we already sell out whatever we produce, right?
Yes.
And the other question is, what is our dividend policy?
Dividend policy, as I just mentioned in my opening remarks, we have given an interim dividend of 3 rupees, and we will be giving approximately, subject to certain conditions, which is mentioned in the dividend policy, which we have posted on our website. 25% of the net profit would be as a dividend.
All right. Thank you. And what about the urea? Like, how we are going to explore other markets with constant capacity of urea?
So what happens is that there are newer capacities of urea coming up in the country in the public sector undertaking, where public sector is putting up. For example, certain urea plants are coming in Bihar, certain capacities are coming in Ramagundam, Talcher. So those urea capacities will feed certain markets where we are present today. We will move out of those areas, not fully, but partially, and take that urea to newer territories. But that doesn't mean that we will give up our non-urea business. Non-urea business will be there. After all, there are many companies in India who don't manufacture urea, and they are leaders in non-urea business.
Okay.
So we will continue to grow.
Okay, this is kind of preventive measure kind of thing, right? So we may lose our market share, whatever in our current.
We may lose market share in urea.
Okay, in urea. Okay, all right.
That's right. So which we will like. And what happens is, when you enter a new territory, urea helps to establish yourself very fast. We can establish without urea also, but it will take time. Because our quality of urea, let me be honest with you, I'm not saying because I'm the managing director of Chambal Fertilizer. Our product quality is second to none in the industry. So the moment farmer uses Chambal's urea, he then tends to get married. And क्या होता है? If the urea quality is very good, the brand image of the company starts improving immediately. The farmer feels this company is good. इनका product अच्छा है. So that means the positive outlook for the company increases, and he starts feeling that our other products will be also as good as urea.
Okay, so
that's sort of a spin-off effect which takes place on.
Okay, so we are selling non-urea product also with the brand with Uttam.
Yes, all are under Uttam.
Okay, so it's the same brand for every product, right?
That's the Uttam is the mother name.
Okay, all right. So, and this non-urea products we just outsource, right? We don't do any production, right?
No, we don't do any production. We outsource.
All right. Thank you very much.
Yeah, thank you.
Thank you very much. Next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yes, Saket.
Yeah. Thank you, sir. Thank you for the opportunity. Sir, firstly on this, hello.
Yes, tell me.
Yes, sir. Firstly, sir, you have told the diversion of urea into other sectors, sir. Earlier, the government came up with this policy of neem coating. So, is that not mandatory for whatever urea is being produced by all the producers, or is there some different?
No, neem coated is 100%. It is mandatory to produce neem coated urea today. Neem coated urea helps in prevention of diversion and also reduces the intake of urea to the farmer. Because what happens with the coating of neem, there is a slow release of fertilizer. And as a result, what happens? The nitrogen use efficiency improves. But neem coated urea is also used by certain industries.
Okay.
So farmer is trying to plug that loophole by restricting the number of bags which the farmer can use.
Correct.
Anil, if I may add, I think Saket is thinking that when we talk of diversion to other, it's not diversion, Saket, to another industry. What Anil mentioned earlier is that we would be able to divert urea from some markets where other players are coming into other territories.
I was talking, Gaurav, please. I was discussing only diversion to industry.
Okay.
Yeah. It was specific with diversion to industry, not diversion from one sector, one segment of our business to other segment.
Right, sir.
Saket, I hope I've answered the question.
Yes, sir. But what Gaurav sir was trying to explain, if he could complete, sir, what was his thought process?
Gaurav, would you like to share what you would like to tell you?
I think, Saket, you inferenced from the earlier remarks that we are looking to divert urea to another industry. That is not the case.
That's correct, sir. But you were trying to explaining that we are diverting urea to other geographies also. That was your point?
I think what was mentioned earlier is that as other plants come up, right, public sector units, etc., towards the east, we would then be able to use some of the urea that we would release from there into other growth areas. But because of our brand strength, we would still continue to do well with the non-urea products.
Okay, sir. So
in those areas.
Okay, sir. The cost of material consumed, the raw material basket has been very benign for us, and that has contributed a lot towards the building up of the bottom line. So how is raw materials, sir, shaping up, sir, going? And if you could give the mix raw material and how are we securing the same going forward also?
Let me be honest with you, Saket. Because of the benign condition, our profitability has not increased at all.
Okay.
Because the government has not released the subsidy. The benefit of this benign condition basically comes to the government. So what has happened, our subsidy bill, which was earlier X, is now Y being lower than X. But the government has not paid us Y also. Yeah, to that extent, our working capital requirement has come down because of this lower cost. And to that extent, there would be slight improvement profitability, but that would be very marginal.
Okay. But sir, since the raw material have been reduced, the finished prices have been aligned to that extent, or the finished prices have remained somewhat but stable, because urea is a fixed, the prices are fixed. So I don't think so.
I'll just share with you. For example, if the cost of production earlier was 18,000 rupees per ton, now that may have come. I'm just giving you a very approximate number. It could be 18, it could be 19. Say, put it this way, it would be. Anuj, do we have exact numbers? What was it last year compared to what is it today, total cost of production? Anuj?
I will not have the exact number, sir.
So last year, what was the average cost of production? Padepan 1 and 2.
I just answer this. As compared to last year, our cost of production has come down by 4,000 to 5,000 rupees per ton. So that is because of the lower gas prices in in urea.
But the government, the real benefit of which would have come to us if the government had paid us on time. The government has not paid us on time.
Yes.
What has really benefited Chambal is the lower cost of borrowing which we have done compared to last year. And that is why if you see our interest cost in this quarter is substantially lower than last year. That the main reason is lower cost of borrowing.
But sir, this subsidy is payable to you.
Borrowing today is sub 4%.
Right, sir. But this subsidy is payable to you, sir. This will come down. You have booked it as an income only. So this will be there.
As an income, I agree. But government has not paid us. So as you see, the total amount of outstanding from Government of India literally remains the same from last year to this year.
Right, sir.
Abhay, what was the subsidy last year compared to this year? What are the numbers?
Just a second.
So last year it was 3,900 crores. This time it is 4,700 crores.
Last year it was how much?
Last year was 3,916 crores subsidy outstanding in September 20. This year it is 4,774 crores.
So our subsidy has gone up.
Yes, sir. And what has been the exact, any release has happened for the first 6 months, sir? Definitely, this is
large amount of money has been released.
Yes. So this is a continuous process. As you sell more, you will be liable to receive more on the subsidy front.
I agree. But what has happened? Yet our interest cost is lower than last year because our borrowing cost has reduced substantially.
Yes, that is on the market forces that has lowered the.
Because of the market forces, and our rating of Chambal is very good. We are a AA company with positive bias as far as long-term paper is concerned, and at short-term we are at P1+. So today, Mr. Bajal is able to borrow money from the market sub 4%.
Correct. Right, and the future is for the phosphatic fertilizer. So that is what you were pointing to earlier, participant. That if more and more thrust is skewed towards the phosphatic part, the fertility rate and the acreages, everything, every dynamics will change if we start moving away from urea.
For the farmer, I agree.
For the farmer. Yeah. Thank you, sir.
Thank you.
Thank you.
Ladies and gentlemen, we'll take our last question now, which is a follow-up from the line of Madhav Marda from Fidelity. Please go ahead.
So no, I just had a broad question. So there was some news flow around government announcing, a PLI scheme for agrochemicals. Of course, it's just a news flow. Nothing is clear yet. But in case an opportunity like that comes up, is that something we would consider, given that we are planning to diversify into the non-fertilizer space?
Let me be honest with you. At this moment, we are not looking at diversifying into manufacturing of agrochemicals.
Okay.
There are no plans in Chambal to go in that sphere.
Understood. Okay. Thanks a lot, sir.
Thank you.
Thank you very much. As there are no further questions, I now hand the conference over to Mr. Kapoor for closing remarks. Over to you, sir.
I would like to thank all the participants, and I can see there is a lot of active participation taking place in Chambal. And I would like to thank all the participants who have asked questions. Thank you.
Thank you very much, management. Ladies and gentlemen, on behalf of Chambal Fertilizers and Chemicals Limited, that concludes today's conference call. Thank you all for joining us, and you may now disconnect your line.